small cap investment company Sherbourne Capital today announced a giant-sized deal. It's buying a controlling stake in another investment company for $9.5 million. Sagie van Niekerk is CEO of Sherbourne Capital. Welcome, Sagie. And do tell me, because to be honest, it was the first time I'd heard of Sherbourne Capital, and what drew my attention, of course, was the size of this particular deal. So let's go back. You used to be, in some form, IFCA Technology on AltX, and what do you know?
Sherbourne originated from the re-engineering of IFCA Technologies that was listed in 2006 by IFCA MSC, listed in Singapore. They wanted to use the listing as a springboard software development company to enter Africa and South Africa. We actually started the re-engineering process of Sherbourne Capital approximately 18 months ago, whereby we actually changed the whole board. We changed the company strategy, we changed the operational processes, and that was concluded on the 4th of June earlier this year. Now we are on our growth path, and the first step in that direction is the acquisition of Arkein Int'l.
So it's an investment company. You buy businesses with a long-term view. So it's not private equity in that sense, but it's private equity in the philosophy of being very involved with the companies and bringing operational improvements.
We see ourselves as business partners, getting involved in privately owned companies, re-engineer those companies, recapitalize them, and enable them to execute a new growth phase in that company's life cycle. Quite key in privately owned companies, they either lack the skills, and by that we don't replace the existing skills of the champions driving that business. We purely come in to complement the existing set of skills, use the listed platform to actually enter capital markets, whereby a privately owned company on its own would not have been able to do that. We're looking at a strong management team, entrepreneurial flair. Purely, that's where our business is, that's where our expertise is.
Now, you've done this deal buying a 51% stake in Arkein Int'l, a Mauritian-based business, but it's got 5 projects, so, most of them, all of them in Africa, copper in Zambia, methane in Rwanda, etc. So this is diversifying your exposure in the region.
When we got involved in Sherbourne, one of the key business drivers is actually to get involved in a portfolio of products across the African continent. We wanted to provide a vehicle for global investors, almost as a conduit that requires exposure throughout Africa. When we bumped into the Arkein transaction, that immediately gave us the opportunity to get exposure throughout Africa, to get on board an industrial partner that will assist us in executing our industrial projects. If you go look at the partners involved in Arkein, it's the likes of Evras Highveld Steel, it's Konkola Copper Mines up in Zambia, it's Hatch, which is probably one of the biggest consulting engineering firms globally. They have got the technical expertise, which for us going forward, for Sherbourne's perspective, is should we engage in any industrial related project, they will be the team. They're an experienced team, they're a vibrant team, entrepreneurial approach. So any future industrial product company that will come through our doors, Arkein will be the managers of those projects going forward.
So for the time being, Arkein is private equity owned 82%, so presumably they're selling off a stake that they own to you.
They will dilute proportionally the two shareholders, and we will issue paper in Sherbourne to the like of $4.8 million, which accounts to 67.5 million shares at 50 cents a share. The underlying 50-cent logic is purely the value that we're bringing into the company.
So, Sagie, $9.5 million is a lot of money. 40% of that you're going to be paying in cash. What's your source of funding? Is it equity funding? Do you have third-party capital, debt? What is it?
It's a combination. That's after all why we actually listed Sherbourne, is to provide a privately owned company such as Arkein a hybrid approach in terms of getting the most cost-effective way of raising capital. We've got an equity drawdown line through equity partners based in New York. We also have engaged, prior to us cleaning up the company already, with institutional funders to look at tailor-made structures, specifically linked to a specific asset's cash flow. So we've got those vehicles which we're now going on a capital raising show within the next 2 weeks. So yeah, the capital portion or the cash portion, $3.75 million is payable over a 6-month period. The balance is payable within the 3 years, the first 3 years, as a control premium.
Now, Sagie, I saw at the bottom of today's announcement that it could be that your listing could be suspended because of this deal being considered as a reverse takeover.
if you look at the Arkein acquisition and isolation, yes, surely there is a risk definitely that you would be delisted. From our side, if you go look at our company strategy, we are on a continuous lookout for target companies for acquisitions, and this will not be the last acquisition that we're looking at. So there's plenty of opportunities coming through our door, and with the partnership of Arkein, we will be able to execute.